Welcome to This Week in Money. I'm Jim Goddard. Today, Euro-Pacific Capital CEO Peter Schiff believes the U.S. dollar is near collapse and advises how to avoid the problems caused by that. Mike Swanson from WallStreetWindow.com feels North American markets are stable, at least for now, and suggests markets where you could make some handsome profits. We'll talk to Peter Schiff right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is Peter Schiff, CEO of Euro-Pacific Capital, also the boss of Euro-Pacific Canada. Welcome to the show, Peter.
Oh, thanks for having me. I'm not actually boss of Euro-Pacific Canada. I have an ownership interest.
Oh, okay.
It's run up in Canada. We got 3 offices, Vancouver, Toronto, and Montreal. So anybody in Canada interested in helping to apply my investment philosophy would be able to do it through Euro-Pacific Canada.
Right, and if you want to hear what Peter has to say all the time, take a listen to SchiffRadio.com here in Canada on the internet to find out what his investment philosophies. Peter, how would you describe your investment philosophy if you could?
Well, right now I recognize the extreme risk associated with the U.S. dollar and dollar-denominated financial assets, such as a treasury bond or even a corporate bond that's an obligation to repay dollars. I see a huge disaster coming in the United States. I see a currency crisis and therefore a much bigger financial crisis than what we had in 2008. I think in general, U.S. assets are overpriced, our stock market, our real estate market, especially relative to stocks in other countries. So I want to stay clear. I think it's going to be a complete implosion. It's hard to say exactly when, but the further into the future the bankers are able to push it off and the politicians, the worse it's going to be and the more important it is to protect yourself. So we're investing abroad. We're investing in foreign stocks. We're in emerging markets, developed markets, buying natural resources, companies that operate in the resource space, that have good assets, that have good earnings and good balance sheet, good management. We're investing in foreign currencies, commodities, precious metals. We're buying lots of gold and silver. We're buying the companies that mine gold and silver.
Wow, so you're a busy guy.
I try to stay busy, and there's certainly a lot to do. There's a lot going on, but I'm trying to get a lot accomplished before the music stops. I think that ultimately the people who don't reposition their portfolios in time are going to be in a lot of trouble.
I know a lot of people are saying the stock market is simply unsustainable. The growth has to stop at some point. And because of quantitative easing, when it does crash, it's going to be worse than it would have if they would have just left the markets alone.
Oh, no question. I mean, in the United States, the stock market is only rising because of quantitative easing. That's it. It's not going up because of an improving economy or because corporations are more valuable because they're earning more money. That's not happening. It's all about cheap money and the artificial prop to stock prices, because all that money is entering the system through the Fed, through the markets. Companies have access to all this cheap credit, which they use to buy back their own shares. Americans are buying stocks because there's no yield anyplace else. So overpaying for stocks, I guess, for people makes more sense than overpaying for bonds or just leaving your money in cash. So the government has rigged this game. And yes, the market will go up until the Fed stops supporting it. And when the Fed stops, it's going to implode, which is why the Fed might never stop. But that means the dollar is going to implode instead of the market. And so it won't matter, if the Dow Jones is at 50,000, right? If the dollar's lost 90% of its value, because then it'll feel like it's at 5,000.
Wow. Yeah, of course. The money is just not what it was when you bought that stock.
Yeah, and it's one or the other. The Fed's going to have to choose the markets or the dollar. Is it going to prop up the government and prop up Wall Street, or is it going to rescue the dollar and save it from oblivion? But, if the dollar is printed into oblivion, that's going to destroy our economy. It's not going to matter what the stock market's value is. The best performing stock market in the last decade was in Zimbabwe. But what good is it? Your stock portfolio is basically worthless, even though it's skyrocketed in price, because the currency that it's denominated in, that's priced in, was destroyed.
Is there going to be a different world reserve currency than the U.S. dollar?
I don't know. Hopefully there won't be any reserve currency to replace the dollar. Gold should be the reserve. Money. That's what needs to back currency. Real money, not just some other fiat currency. And, when the dollar became the reserve currency, it was backed by gold. It was redeemable in gold. You could take your dollars, your Federal Reserve notes, to a Federal Reserve bank, and they would give you gold. That was the deal. That's what made the dollar a reserve. But now that the dollar is just a piece of paper, it's an empty promise. It doesn't have any intrinsic value. And so when people back their currencies by the dollar, that's the same thing as backing your currency with nothing.
And has the U.S. been purchasing gold? Look at China and India. They've been buying as much gold as they can get.
We haven't bought any gold. We might have even sold the gold we have. Who knows? Or we leased it out. I don't know. But we're definitely not buying gold. Whether or not we sold the gold that we claim to have, nobody really knows for sure. But the smart central banks are buying gold. And they should be buying more. And they're going to be buying more. They're just going to pay higher prices for it eventually.
I know people have asked me the question, is there really gold in Fort Knox?
Well, that's what we're suggesting. I hope there is. I assume there is. But, it wouldn't surprise me if the government were lying about how much gold is still there. Maybe one of the reasons the price hasn't gone up more is because they've been quietly selling it. I have no idea.
Well, we did have that big sell-off in June where the price of gold, dropped $250 like overnight.
Yeah, well, I think you had mass liquidation on the part of speculators. A lot of big funds all ran for the exits at the same time. You had Goldman Sachs saying sell gold, it's just short. You had people talking about the Fed tightening. That was when they first started talking about tapering, which of course was all talk. They never did it. They had never any attention to. But the markets were fooled by that tough talk, and they started to price in tighter monetary policy, and everybody tried to sell their gold at the same time, and so the market dropped sharply. But they found buyers for all that physical that came on the market. The question is any of that gold going to be for sale when the speculators want back in? I don't think so.
Well, China, at the rate that they're picking up gold, I've been told that they will possess all the gold produced this year, all the physical gold.
And it's still not enough. They need more.
Where's it going to come from?
Well, China's the biggest gold producer in the world, so they'll get gold from their own mines by buying it from their own production. But, yeah, they can import gold, too. They have plenty. They have almost, $4 trillion now in foreign reserves. Only 2 or 3% of that is their bullion reserves. So they got a lot of paper to exchange for real money.
Is there any danger the U.S. will someday default?
Oh, well, it's inevitable. It's not that there's any danger of it. I think if you wanted to put it that way, is there a chance that they won't default? And, no. The only question is they might not technically default in that they pay you off with worthless money. But that's still default. If they have to print money and when you get it, it's not worth anything, that's still a default from the perspective of the creditor. If you don't get your purchasing power back, it doesn't matter that you got your money back. And so either we're going to default, legitimately, where we just don't pay our creditors 100 cents on the dollar. So default doesn't mean our creditors get nothing. You can have a bond, $1,000 treasury bond, and the government could say, look, we can't pay $1,000, but we'll give you $300, right? So that's a default, but you get something, right? You got $300. But the alternative is they give you your entire $1,000, but it's the dollar's lost so much value that it feels like you got $100, because prices are 10 times as high as they were when you bought the bond. That's still default. It's just massive inflation that. The government, it's your purchasing power that is stolen from you, not the nominal money. But either of those scenarios is what has to happen. The one thing that I know cannot happen is legitimate repayment. That's not even a possibility.
Wow. And of course, did China feel this was going to happen or know this was going to happen when they decided to help refinance the U.S.?
No, I don't think so. I mean, I don't think they would have knowingly done this. But they kind of got backed into a corner, and now they're stuck there, and they don't know what to do. Their instinct is to just continue to throw good money after bad, refuse to admit their mistakes, and just, press forward with this strategy, hoping for a miracle, kind of like Bernie Madoff did. But, it didn't work for Bernie, and it's not going to work for China. They just got to fess up to the mistakes that they've made and cut their losses and stop buying our bonds and stop stockpiling our currency and just let the dollar tank. I mean, that's what they have to do. That's what all of our creditors need to do.
And if that happens, what happens to the American government, the country itself?
Well, the government's going to have to cut spending dramatically, which would be a good thing, because if foreigners aren't financing it, then we can't spend. The Fed's going to have to raise interest rates, because if the foreigners aren't buying, if the Fed tries to pick up the slack, the currency will get wiped out, and that'll destroy the economy completely. So, if foreigners stop propping us up, then, we might actually have to make the difficult choices that we're continuing to procrastinate. And the reason we don't deal with it is because we don't have to, because we can kick the can down the road, because foreigners keep buying the currency the Fed's printing. And as long as they're doing that, then the Fed can monetize the debt. And as long as the Fed can monetize the debt, we don't feel the full cost. As long as the Fed can monetize it without the money pushing prices through the roof. But when the foreign governments no longer cooperate, then we get massive increases in prices, and then again the Fed can't play that game anymore.
More with Peter Schiff next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're chatting with Peter Schiff, CEO of Euro Pacific Capital. Peter, where should people be putting their investments then if you think the stock market is unstable and unsustainable? And, of course, U.S. government bonds aren't worth anything. So what should we be buying or investing in?
Well, first of all, there are stock markets outside the United States, and that you can look at in individual stocks. It's not necessarily the market that you need to be concerned about, but the company that you're buying. I mean, are you getting good value for your money? Are you overpaying? Or are you getting a deal? Look at the PE. Look at the dividend yield. You also have to look at where the company operates, where it does business, who their customers are. So I think there's a lot of problems with the United States, and I think the U.S. market's going to have problems. I think that I would rather own U.S. stocks than U.S. bonds, but fortunately those aren't the only choices out there. There's a world of options to choose from. And, yeah, we're helping our clients at Euro Pacific Canada, choose wisely, make the best choices as far as the markets to avoid and the markets to participate in, the companies to buy and the companies not to buy. But you still need to be invested in stocks. You need to get good dividends. You just need to be globally diversified. You got to be in Southeast Asia. You got to invest in areas of the world that have embraced capitalism, where you have a lot of savings, where you have a lot of legitimate economic growth, you have a lot of exports, you have undervalued currencies. These markets are going to, I think, over time do very well. You also don't want to ignore what's going on in the gold market and the silver market. I mean, there's a correction going on. It has been for most of this year. This is a great buying opportunity. People should be buying gold, and buying silver. I sell gold and silver. Canadians can buy from me from Europac Precious Metals at schiffgold.com. We're in the U.S., but we certainly sell gold to Canada. We also sell gold through my offshore bank at Euro Pacific Bank, which is down in the Caribbean. And in fact, if you open up a bank account with me, if you're a Canadian citizen, you open up a bank account down there, not only is it a totally secret, private account, but you can denominate your account in gold or silver. And you can get a debit card that enables you to spend that gold and silver, as easily as you could use your debit card to spend your Canadian dollars. So you can put yourself on a gold standard.
Wow, that's something that we have to have for a long time.
Bank. Yeah, EuroPacificBank.com. People can check it out if they're interested.
Is it legal?
Of course it's legal. I wouldn't do it if it wasn't legal.
The government sure makes it sound like it's illegal.
It's not.
Every time somebody says, I've invested money in the Caribbean, well, Isn't, Washington or Ottawa going to track you down and take it away?
Well, Washington, I don't take American customers, so there's no Americans that have accounts in my bank, so it shouldn't be of interest to Washington. But, Canadians are allowed to open up bank accounts anywhere they want. I have a legitimate bank. I mean, we're regulated by the government of St. Vincent's, but we offer unique products and services that other banks don't offer. I also don't make any loans. So it's 100% reserve bank. So you don't have to worry about the bank failing because, I got some bad loans out there. I'm not making any loans, so there's nothing to go bad.
Wow. Maybe the big banks should have been watching what you were doing.
Yeah, well, they want to make obscene profits, using leverage and, central banks. I'm not welcome at the Federal Reserve's window. I can't go to the Fed and, get a bunch of cheap money. I need to get my money from my depositors. I have to get my money the old-fashioned way, right? I have to earn it. I have to convince people to deposit money in my bank. But I think more and more people who appreciate the safety of my bank and who appreciate the products that my bank offers, not only these gold and silver bank accounts, but brokerage services, asset management services, proprietary mutual funds. There's a lot that you can get when you have an account with my bank that you just don't get at most local banks that would have branches there in Canada.
Should we be prepared for a confiscation tax where governments start dipping into our bank accounts like they did in Europe and Cyprus, especially?
Well, that's what inflation is. They dip into your bank account without having to physically do it. I mean, whenever the government creates inflation, whenever a central bank prints money and buys government bonds, they're letting the government, pick your pocket. They're putting their hand right in your bank account, and they're seizing your purchasing power. So that's already happening. Whether they will actually take the money from you rather than just take the value from the money, who knows? But at the end of the day, it doesn't make much difference because they're already doing it. So you've got to protect yourself from both types of confiscation, whether it's outright or through inflation, because the end result is the same, is that your wealth is diminished. Your purchasing power is curtailed by government action.
If your money isn't worth anything, what are you going to buy things with?
Well, first of all, your money might be worth less, right? It might not be worth zero. So even if the Canadian dollar were to lose 80% of its value, well, you could still buy stuff with Canadian dollars. You just would buy a lot less than you used to be able to buy. But, you would just need more Canadian dollars to buy something. But even if the Canadian dollar became completely worthless, which I don't think will happen, but if that were to happen, then you would have to buy something with something else that people valued. Maybe you could use Swiss francs, right? You can maybe if somebody would sell you something for Swiss francs, you can probably get them to give you something for gold or silver, right? People will generally recognize the value in gold and silver, and they'll be willing to transact in that, because people are still going to have stuff that they want to sell, and they're going to have things that they want to buy. So there's going to be commerce. There was commerce before we had paper money, and there'll be commerce if paper money disappeared. But people have to understand how the value of paper money can evaporate so quickly. When you have its fiat currency, it's got nothing tangible behind it. If the government just keeps on printing it, and then people lose confidence in its future purchasing power, then nobody wants it anymore, and it's worthless.
Well, it kind of reminds me of the situation you used to see in communist Russia, where if you visited Moscow, there's the official exchange rate, dollars for rubles, and then there's Ivan standing around the corner saying, hey, don't take that official rate. I can give you a much better deal. Well,
yeah, you get a black market. That's what happens when you get controls, when you get government exchange controls where they have an official exchange rate, where the government tries to peg a rate. But then if they do that and they keep on printing money and creating inflation, well, then people don't want to transact at that official rate because basically they lose. And so what happens is you end up having black markets. You end up having an illegal market for exchanges because you can't really buy or sell at the official rate. Yeah, if your currency is decreed to have a certain value that it doesn't really have, yes, people are going to want to exchange their currency to get other currencies at the official rate, but nobody that has the other currencies is going to want to exchange it for the official rate. So it doesn't work. And so then you have to get you get the black markets.
Could you use oil or some other commodity rather than gold as the basis for your money?
Well, you could. You could use a lot of commodities as basis for money, but the question is it superior to using gold? No, I mean, it doesn't, what are you going to do? Are you going to carry around buckets of oil? And, well, I mean, you're going to spill it? How efficient would it be, to try to transact in oil? But gold is very convenient. I mean, that's why gold became money, because it's very easy to use it in commerce. You can get a lot of value in a very small quantity, and, it's not going to spill. It's not going to go bad, right? I mean, and an ounce of gold is an ounce of gold. I mean, what if you decided to use cattle as money? Well, I mean, not all cattle are identical, right? And what happens to cattle as they get old? They die. They have a finite life, right? Gold is the same. If I have an ounce of gold and you have an ounce of gold, we have exactly the same thing. So I can lend you an ounce of gold, and you can promise to pay me back in 5 years, and I'm going to get back from you exactly what I loaned you. And then I can charge you interest, but I know exactly what I'm going to get. In fact, I can take that gold, I can bury it in the ground, and they can dig it up in 200 years, and it's still there. So it's not going to change.
What about countries like Germany and Japan, where you can buy little gold ingots out of vending machines? Are we going to see those here?
Well, ultimately, if we go back on a gold standard, you don't actually have to buy the gold from a vending machine. I mean, people could just do what I'm doing with my bank. I mean, people could just, carry debit cards where the gold is held in a vault somewhere. If we go back on the gold standard, where your paper money is backed by gold like it used to be, then you can carry around the paper money, because the paper money would be a receipt for the gold on deposit. You can get it when you want, but there would be no reason to get it. You have the right to get it, but you don't need it, because, people will accept the paper, because, now if you spend the money, then, the person that you gave it to, will now have the right to claim that gold. But the key is that we have to have something real behind the value of our money, because if you don't, then they're just going to print it indefinitely. If you let politicians print money out of thin air, to give voters something for nothing, that's what they're going to do. It's much harder to give somebody something for nothing if they have to pay for it. And when you're on a gold standard, you can't have all this free stuff from government, because the government is going to have to raise taxes to pay for the free stuff. When there's fiat money, they could just have the central bank print it. And, then they have inflation, but they lie about that. They claim it's a lot lower than it really is. And then they try to tell us that it's actually good for us and we need more inflation. And when the public complains about it, they blame it on the Arabs, or they blame it on speculators. They never accept responsibility for it.
Yes, and of course, none of them have the economic background to run much of anything.
Well, they don't have any economic background at all. That's why they're in politics,
Yeah, they have the most bucks and responsibility and the least amount of skill on how to handle it.
It's
very interesting.
I mean, they're just salesmen. They're professional liars. They're good at lying, and they schmooze people. They get along with people. They know how to tell people what they want to hear. That's what they are. And I think in general they're very selfish people. They care, about themselves, and although they pretend that they're in politics because they want to serve the public, they're interested in serving themselves, and they realize that they can enrich themselves better with the power, of force than they could if they had to get rich through a voluntary exchange. It's a lot harder to run a business and convince people to give you their money because they value your services or your products. It's a lot easier to become a politician when you can take people's money, even if they don't want to give it to you.
Peter, is there a website somebody could go to take a look at how they could maybe do business with you, or take a look at some of your policies and views on money?
Yeah, well, there are a number of websites. I mean, for my Canadian brokerage firm, it's Europac.ca, EUROPAC.ca. The U.S. firm is Europac.net, EUROPAC.net. And I put up a lot of commentary, but you can read the commentaries too, I think, on a Canadian site. But I do a lot on my radio show, which I do every day at SchiffRadio.com. People can listen live from 10 a.m. to noon Eastern Time, or you can kind of go to Schiff Radio whenever you want during the day and listen to the most recent show, because we constantly repeat the most recent show on a loop. So every 2 hours it restarts. You can read my books. My latest book, which is out there, is The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. So that's a good read. And people can just, visit my YouTube channel at Schiff Report. I put up a lot of good videos that people can watch to learn about what's going on.
After the break, Mike Swanson on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Hey, thanks for having me.
I'm wondering, so many commentators have said the stock markets in North America are going along fine right now, and it's probably a good place to make money, but they don't think the good times are going to last much longer. What's your feel on that?
Well, the last time we spoke, I remember we talked about what I thought were the dangerous stock markets, and they were the ones actually in Indonesia, which had something of a little crash in the summer. But as far as here goes, the S&P 500 has been in a bull market now for 4 years, and it isn't going to last forever because none of them do. That doesn't mean the world's going to end or anything, but that said, I see no signs at all that this bull market is over. I don't believe it's over. I don't think it's going to be over for another couple of years, actually, and the reason why is that you usually see lots of signs ahead of the end of a bull market. So, for example, leadership in the stock market will become narrow, meaning that fewer stocks participate in the bull market and some will actually start to go down. If you look in 2007 at the last bull market top, most over 50% of the sectors in the United States stock market were actually down already when the top came. Right now, that isn't happening. There's broad participation in the market. And that's a trend that takes usually at least a year for that kind of divergence to play out. So that's my take on where things stand for the U.S. and Canada's pretty much the same too.
Right, and if the price of gold also seems to do opposite to what the markets are doing. Any predictions there?
Yeah, gold is actually sort of in the opposite scenario. The thing is that even though I said I don't think the bull market for the U.S. is over, I'm not excited about buying there myself because it has gone up for 4 years. It is overvalued. So, usually the big gains come at the start of a bull market. And if you look at gold stocks too, they've been in, I would think, a small mini bear market since 2011. So they actually, everyone knows they've been declining or they have declined. But I think they bottomed in the summer. We saw 2 dramatic drops, and often at the end of a bear market, that's what you get, just drops that no one can take anymore, and they're so brutal that people just sell and give up forever. And in essence, that's what happened to the S&P 500 in the spring of 2009. And here it happened with gold. So I think what we're seeing now is a transition phase for gold and gold stocks where they've ended their big bear market decline. It took, over 2 years, and now they're going sideways and they're building a base, and it's bases that new bull markets are launched off of. So if you look at the HUI, for example, right now, it has resistance in the 280 to 290 area. That was the highs of the summer, of August and September, and it's below that now. It's going down today, but when you get a basing phase, that's what happens. You get up and down moves, and those moves alone, people get sick of it and give up because of that. But the thing is, if this HUI or I should say when the HUI breaks the 280 to 290 level, you're going to see one of the greatest bull markets in gold stocks and gold you've ever seen in your whole life start.
Some people have suggested 1335 is kind of the benchmark for gold. If it hits that, it's probably going to start to skyrocket again.
I think so. I think those people are exactly right. And so, as we're speaking, we talked about the U.S. stock market. Well, there's no sign the run is over, but there's nothing exciting about it anymore. And it's gold and the mining stocks where, that's what excites me. But ironically, very few people now are that interested in it anymore. And that's what tends to happen too. Right when everything seems to be getting quiet and boring, that's when the turn in these markets happen. So it could happen before the year's over or I don't know when, or it could happen in the first couple months of next year, but I think it is coming.
People also say gold is being snapped up like crazy by China and India. They simply just don't trust paper currency anymore, and of course, who holds all the U.S. debt?
Well, that's exactly right. And the problem is that it's a scary situation. And it's the Federal Reserve, and Benjamin Bernanke, in September was supposed to cut back on his bond buying programs. Well, of course he didn't, and he's continued, and he can't. That's the problem, and no one will say it, but the reality is, if you remember before 2008, 5, 6, 7 years ago, all the talk was China's financing the debt, the United States deficits. They're buying the bonds, they're owning the debt, they are our paymasters. Well, what happened was, because those Wall Street bailouts happened, and the deficit went from $500 billion to $1 trillion overnight, in one of the biggest scams of our lifetime. And then the next year, you thought, well, maybe that's a temporary one-time deal, that bailout. Well, it turned out that government spending is very difficult to cut back once you let loose. So the next year it went into stimulus programs, essentially pork barrel ripoffs, and now we have the health care bill. So the deficit is simply growing, or has failed to shrink. But the problem is it's so big. $1 trillion is so much money that even China can't finance it all. No one can finance it all. So the Fed has to print money to finance the debt. And that's why they really are stuck, and they can't eliminate this quantitative easing money program. And China is sitting there now, seeing the United States, and the world's seeing it, print money to finance the deficit. And the dollar, as we're speaking, the past few weeks has fallen quite a bit since that Fed meeting. The euro has broken out and is becoming a safer currency than the dollar. And people are getting more into gold, and it's a smart, intelligent thing for the people of China and the Chinese government to hedge themselves in gold. And the leadership of China historically, if you look at China's history from the dawn of man, they're some of the most forward-looking and thinking and planning people ever. So they're not going to get caught in these dollars if they start to drop one day, and I think they will in a couple of years. It's a slow crisis and situation. It takes years for it to really build up, but the Chinese are preparing themselves now.
Sure, the Chinese, in North America, we look at everything on a quarterly basis. They have 5-year plans, 10-year plans, 25-year plans, 50-year plans,
right.
100-year plans. And I'm not joking.
No, that's exactly right. We can't plan. If you watch CNBC, all they talk about is what's happening this minute. They don't figure out, they don't ever tell the viewers, well, where are the cheap values at where you can actually invest and hold? They just talk about what's going to happen at the next Fed meeting, which of course we all know what's going to happen. Nothing, and nothing different, and earnings reports. But if you want to really invest, you have to look forward. And the only, the most reliable way to do that is to invest in things that are at a cheap value after they've gone through one of these bear markets. So that's what the gold stocks are providing. And also there's markets in other countries too. Most of the markets of Europe had bear markets also, and they bottomed last year, and they've been going up for essentially a year now. They've broken out in August and September to new 52-week highs and are outperforming the S&P 500. And then you have the nation of Argentina has had a currency down collapse over the past 2 years or so, but the stock market there crashed, and also it appears to have bottomed and be starting a new bull market. So there's a place that also, I think, provides really good opportunities. And typically when these new bull markets start, they generate giant gains for 2 to 3 years.
Mike, we always focus on the Dow, the S&P, and also here in Canada on the Toronto Index. But around the world, Argentina had a huge crash, and now, of course, there's a good chance to make some profit there. What other stock markets around the world look like good investments?
Well, at the moment, that's the one that is earliest into a new bull market. Other than that, the ones that look the most interesting to me are many of the markets inside of Europe, and Russia too. Some of these markets already have gone up a huge amount. The Greek stock market, for example, is up almost 100%. But one that hasn't really taken off yet is the Russian stock market. And these are all markets that are trading at valuations that are about a fourth of the U.S. stock market. So if you look at the U.S. stock market, it's got a cyclically adjusted P ratio of 24, and most of these are 8 and lower. Argentina is like 3, and so is Greece. But the Russian stock market is also not quite as low as them, but it's down there, and it hasn't really taken off yet. And I think one of the reasons is because it's closely linked to the commodity market and energy and so forth, and because commodities have been had their little bear market. I think that's what's holding the Russian stock market back, but I expect it to take off and do really well. If people are interested, they can check out the ETF RSX for Russia and ARGT for Argentina, and they can see the charts for themselves.
And what will those charts indicate to you? Lots of room to grow?
Oh, yeah, I think so. If you look at ARGT, you can see the resistance was 18.5 on it, and it's broken out, and it's going up. But the nice thing, though, is that it's actually pulled back the past couple weeks, and that's something I actually think is, even though we've been talking about the big picture trends here, over the short run, I actually think November we could see a little bit of a pause or pullback in markets all over the world simply because they went up so much the past 3 months. And S&P 500 also, I really expect to see a little pullback over the next couple of weeks. And if it happens, I'm planning on buying positions in these countries.
Right. Now, a lot of people are saying we've avoided Black September, Black October. Would somebody say if there's a downturn on the market, it'll be a Black November, or will it be that bad?
Well, I think if it happens now, if it starts now, and it seems like it is, I don't think it'll really amount to much of anything. In fact, last year we've forgotten it, but there was a very small pullback in November, and it didn't really amount to much. I would expect something like that. I actually think would be more dangerous or risky or whatever if the stock market doesn't pull back here and were to continue higher in November, because then it would get so overbought that we could easily get a 10% drop or something like that if that were the case. But hopefully that doesn't happen, and we just get a softer drop here.
Well, before trades, historically were done by humans. Now we have so much computerized trading with stop orders and buy gaps and so on. Is there a danger if there is a slight downturn, the computer programs themselves will just panic and start dropping shares like crazy?
Well, I think you would need to see, I don't think that's going to happen here, but you would need to see a pretty good pullback in the markets. You need to see the S&P 500 fall to 1650, go below 1650, and that would trigger these trading programs and stop loss orders, like we saw happen a couple years ago when the Dow fell below the 200-day moving average. I think it was in 2010 or 2000. I think it was 2011. We had that flash crash thing, but I don't think it's going to pull back quite that much.
If you were a betting man, where's your best bet right now? And you're taking a look at the whole world.
I really like these stocks in Argentina and also the gold stocks, quite frankly. And I'll say that just because I know a lot of listeners are into gold, but the HUI hasn't broken out yet. It's building this base, and I think it could easily be a little weak for a few days if things pull back all over the world, but I'm not too concerned. I think that could easily be breaking out before the year's over. So I think actually that's where some of the best opportunities are in the mining stocks.
Yeah, I originally saw a headline that said gold mining stocks are probably the best bargain in the world right now.
Yeah, I can see that.
And what about silver? Is that following the same fate as gold?
Yeah, pretty much, and the silver stocks also. They're pretty much trading in sync. A few of them are acting stronger than the mining stocks, and I think it's mainly because they simply crashed so much in June and July. It was pretty unbelievable.
Mike, is there a website somebody could go to check out some of your philosophies and predictions?
Yeah, sure. Thanks for asking. They could just go to wallstreetwindow.com. It's all one word, wallstreetwindow.com, and I normally make a post every single day.
Mike, thanks a lot for talking to us.
Thank you.
And thanks to our guests, Peter Schiff and Mike Swanson. And thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.